Welcome to the deep dive. Today we're embarking on quite a fascinating exploration into the world of algorithmic trading.
Sounds interesting. What have we got?
Our subject. It's a company called FAIDA Ventures Limited, and specifically their flagship MT4 expert advisor, which is known as the FAIDA Capital Trader v13.75 EA.
Right. FAIDA Ventures. I've heard a bit about them. Kenyan company, is that right?
Exactly. And our mission for this deep dive really is to understand how this, well, sophisticated solution, which they've apparently refined over more than a decade, has managed to generate consistent data-driven profits. And this has been going on since 2014.
Wow. Okay. Since 2014. That's quite a track record in the EA world. Longevity isn't exactly common.
It really isn't. And we've got a detailed overview directly from FAIDA Ventures themselves as our main source material here.
Good. Straight from the source.
So we're going to try and pull back the curtain on its core mechanics, dissect its real-world performance, and hopefully uncover the underlying philosophy that makes this EA, this expert advisor, which is basically software that automates trading on platforms like MetaTrader 4, stand out.
Yeah, MT4 is still huge for retail Forex, so an EA for that platform makes sense.
Ultimately, the goal is to help you, our listener, grasp what seems to be a powerful approach to Forex trading, one that really aims for reliable, long-term returns.
Okay. Sounds like a worthwhile deep dive. Consistency and longevity. Those are the holy grails.
Okay, let's unpack this.
It's definitely a compelling narrative, isn't it? In a financial landscape that's often just full of fleeting trends and these kind of overnight sensations.
Right, things that flash and burn out.
Exactly. FAIDA Ventures Limited seems to stand out just for its remarkable longevity and the sheer dedication they've shown to this, well, very specific niche within financial technology. That consistency, stretching back over a decade, that's genuinely a rare find in the automated trading space. It really is.
Absolutely. So before we get into the nuts and bolts of the EA itself, let's establish that foundation. Who is FAIDA Ventures Limited? What's their story?
Right.
Where did they come from, and what's the kind of ethos that's guided them all these years?
Okay, so FAIDA Ventures Limited, they were founded back in 2014, and they're headquartered in Nairobi, Kenya.
Nairobi, okay.
Now, that geographical origin, it's not just a footnote. I think it's actually quite significant in the context of global financial markets.
How so?
Well, Nairobi has really become this burgeoning hub for tech innovation and financial services in East Africa. It's quite dynamic.
Right, like M-Pesa and that whole mobile finance revolution started there.
Precisely. And companies that emerge from those kinds of dynamic environments often bring, well, a unique blend of adaptability, resilience, maybe a fresh perspective to the global stage.
Makes sense.
And from their very beginning, their commitment seems to have been singular, unwavering, just perfecting algorithmic trading strategies. That's it.
So real focus.
Yeah, we're talking about a profound dedication, really over a decade, to this very specialized domain.
Over a decade in automated trading. I mean, that really is substantial. It's a field that changes so fast, doesn't it?
No, incredibly fast. Blink and you miss something.
So what does that kind of extensive experience actually imply? About their capabilities, the robustness of their solutions.
Well, it's absolutely crucial. The source material really emphasizes this. More than 11 years of live trading experience.
Live trading. Not just theory.
Exactly. That's the key difference. This isn't just a theoretical exercise, you see. It's not about strategies that look fantastic on paper or, in simulated backtesting in some controlled lab environment.
Right, where everything works perfectly.
Yeah, exactly. This means their algorithms, their strategies, they've been rigorously tested, refined, proven against the unpredictable, often really volatile realities of live market conditions. They've navigated through, various global economic cycles, major news events, shifting market regimes, all the chaos.
Like trying to drive a car only in a simulator versus actually taking it out on real roads.
That's a great analogy.
With changing weather, traffic, unexpected potholes.
Exactly. Live trading experience gives you that real-world resilience. It shows their ability to not just survive, but actually thrive when faced with genuine market challenges that, well, theoretical models just can't replicate. That kind of longevity, especially in a space known for systems that burn out really quickly, it speaks volumes about their fundamental soundness, I think.
Okay, so it's about enduring and succeeding in the real market battlefield, essentially.
Pretty much, yeah.
And who are the people behind this deep expertise, this practical experience? What kind of team is actually driving this innovation?
Well, the company is apparently powered by a carefully assembled team of veteran analysts and developers.
Okay, the two sides of the coin.
Absolutely vital combination for developing and, crucially, continuously refining sophisticated trading algorithms. You need those veteran analysts, the strategists.
Market whispers.
Yeah, maybe. The ones with a deep understanding of market dynamics. They identify the profitable patterns, interpret economic data, design the strategic logic based on, years of just watching the markets.
Right.
Then you have the expert developers. Their job is to translate that incredibly complex strategic logic into robust, efficient, bug-free code.
And that code needs to be fast, right, for execution.
Oh, yeah. It needs to execute trades precisely, rapidly within MetaTrader 4, where milliseconds can genuinely make a difference between profit and loss.
Wow.
So it's a true synergy. The market wisdom and foresight of the analysts seamlessly integrated with the technical prowess and execution excellence of the developers. They have to work closely, collaborate intimately to ensure every strategic insight is perfectly actualized in the EA's performance.
That collaboration between the market brains and the tech builders. Yeah, that makes perfect sense. But in an industry where trust and credibility are just paramount,
Absolutely critical.
what are FAIDA Ventures' core values? How have they managed to build and maintain that essential trust with their clients over such a long time?
Yeah, good question. They explicitly state their reputation is meticulously built on 3 core pillars: transparency, risk management, and client-centric service.
Okay, those sound good, but are they just buzzwords?
Well, in the automated trading world, they really can't be just buzzwords if you want to survive long-term. They're fundamental requirements for establishing and sustaining trust.
Okay, break them down. Transparency.
Transparency for FAIDA Ventures seems to mean that clients aren't dealing with a black box, where you put money in and just hope.
Right, no idea what's happening inside.
Exactly. They imply clients understand how the EA works at a fundamental level, what the inherent risks are, and they can observe the performance without, smoke and mirrors. That open approach builds confidence.
Okay, that makes sense. And risk management.
Risk management. Well, we'll get deeper into this later, but they position it as non-negotiable. It's about protecting client capital as the absolute first priority, minimizing exposure to adverse market movements.
Priority number 1.
Always has to be. And finally, client-centric service. This suggests that every decision, every update, every interaction is made with the client's needs, their questions, their overall experience right at the forefront.
So not just about the profits, but the relationship too.
Exactly. It's about more than just generating profits. It's about doing it responsibly, with consistent communication, and with the client's long-term best interest firmly in mind. I think this dedication to those core values must be a significant factor in their decade-long success.
That emphasis on being client-centric and transparent, it really brings us neatly to their managed account services.
Ah, yes.
Because for you, our listener, who might be intrigued by the power of algorithmic trading, but maybe isn't looking to get into the weeds of setting up and running an EA yourself, how does that work? What's the practical client experience like with FAIDA Ventures?
This is precisely where FAIDA Ventures offers what sounds like an incredibly appealing solution for, well, probably a large segment of our audience.
Yeah, people who want the results without the headache.
Exactly. They provide clients with institutional-grade strategies with zero operational hassle. That phrase sums it up nicely.
Institutional grade, zero hassle. Sounds good.
It's a potential game changer for individuals who want to leverage advanced trading but maybe don't have the time or the expertise or, frankly, just the desire to actively manage a trading account themselves. FAIDA Ventures boils it down to a very straightforward concept.
Yeah.
Just sit back and watch us trade on your behalf. Think about it. For you listening, often looking to gain knowledge efficiently, maybe curious about new avenues for wealth growth without becoming a full-time trader, this offers a potentially powerful hands-off solution.
Right, leveraging their expertise.
You get the benefit of their 11-plus years of live trading experience, their proven algorithms, all without needing to navigate the day-to-day complexities of forex market analysis, trade execution, or that crucial risk management piece.
So it kind of democratizes access to these sophisticated strategies.
That's a great way to put it. It effectively democratizes access, enabling potential wealth growth in an efficient, more passive manner. And what's truly fascinating here, I think, is how their deep roots, their longevity, and that long-standing focus on the client experience have seemingly culminated in a service that prioritizes ease of access and trust.
Making professional-grade automated trading accessible and maybe less intimidating.
Exactly. Worry-free, potentially. It's about providing the results without you having to do the intensive workload.
That really does sound like an attractive proposition for someone who values both efficiency and, well, leveraging expert knowledge. Okay, let's shift gears now. Let's get to the fundamental question that's probably on everyone's mind.
The big one.
How does the FAIDA Capital Trader v13.75 EA actually generate those consistent data-driven profits? Here's where it gets really interesting. What's its strategic advantage? What makes it tick?
Right. This is where the algorithmic secret sauce is, so to speak. At its very core, it relies on pure price action signals.
Price action. Okay, what does that mean in practice?
Well, the source explicitly states no black box indicators. That's a profoundly significant point in the world of automated trading.
Why is that so significant? Lots of EAs use indicators.
They do. Many EAs rely heavily on complex, often lagging, technical indicators, things like moving averages, RSI, MACD, oscillators.
Standard stuff.
Standard, but they're often derivatives of price. They react after a price move has already happened, essentially, meaning you're often chasing the market.
Ah, okay. Playing catch-up.
Exactly. Price action, on the other hand, means the EA is directly reading the raw market sentiment and dynamics from the movements of currency prices themselves.
Like reading the tape in old stock market terms.
Kind of, yeah. It's analyzing candlestick patterns, identifying support and resistance levels, discerning supply and demand zones directly from the chart. This direct interpretation gives a much clearer real-time understanding of what the market is doing right now.
So more responsive?
Theoretically, yes. This approach is highly valued because it allows the EA to adapt naturally and rapidly to evolving market structure. As you said, it's not waiting for an indicator to confirm a trend that might already be half over or even fading.
Right.
It's reacting to the raw pulse of the market itself. This direct reading provides, or should provide, unparalleled transparency in its logic and inherent adaptability, giving it a potentially quicker, more adaptive edge in fast-moving Forex markets where, every pip counts.
So it's not relying on some hidden convoluted formula that's hard to grasp, but rather a direct interpretation of what the market's saying through price.
Wow.
That sounds, more robust, more responsive.
That's the idea behind pure price action strategies.
But hang on, raw price data can be really noisy, can't it? Lots of little fluctuations that don't mean much. How does the EA filter those signals to make sure it's making precise, high-probability entries, not just jumping at every little wiggle?
That's a crucial point, and that's precisely where its highly effective dual filter approach comes into play. This is absolutely critical for sifting through that market noise, reducing false signals, and significantly improving the quality of its trade entries.
Dual filter. Okay, what are the two filters?
It combines two powerful yet distinct technical components. The average true range, or ATR.
ATR, measures volatility.
Exactly. And the ADX indicator.
ADX for trend strength. Got it.
So first, the average true range, ATR. It's deployed specifically for volatility-adjusted entries. Think of ATR like the market speedometer.
Okay, I like that. Speedometer.
It tells the EA how much the price is typically moving over a given period. Now, if the market is experiencing extreme volatility, imagine a sudden erratic surge or crash. The ATR alerts the EA.
Like the engine's revving too high.
Kind of. And it prompts the EA to either adjust its entry parameters to account for potentially wider swings, or, crucially, maybe just sit out entirely until conditions calm down.
Ah, so it can decide not to trade if things are too crazy.
Precisely. Entering a trade during periods of chaotic, high volatility can lead to bigger losses just because of wider price fluctuations, or you might get stopped out prematurely because your stop loss gets hit too easily.
Right, the noise takes you out.
Exactly. So ATR helps ensure precise trade timing by aiming to step into the market only when volatility is within a manageable, perhaps more predictable range, optimizing for calmer moves.
Okay, so it's not just about if there's a setup, but whether the conditions are right in terms of volatility. Makes sense.
Yeah, it's a context filter.
And how does the ADX indicator contribute to this precision? What does the trend strength gate actually do?
Right, the ADX indicator, it serves as that trend strength gate.
Yeah.
If ATR is the speedometer, ADX is like a sophisticated compass.
Yeah.
But it doesn't just tell you which way the market's headed.
It tells you how fast it's going that way.
Yeah.
Or how strongly.
Exactly, how strongly it's moving in that direction.
Yeah.
That's the key. A market might look like it's trending, but if that trend is weak, maybe just drifting sideways.
They could reverse easily or just fizzle out.
Right. trapping traders. The ADX helps identify and confirm stronger, more sustainable directional moves. It signals that there's real momentum, real conviction behind the price action.
Okay, so it's looking for horsepower behind the trend.
That's a good way to think about it.
Yeah.
So by combining ATR for assessing manageable volatility and ADX for confirming robust trend strength, this dual filter approach actively works to reduce whipsaws.
Whipsaws. The bane of trend followers.
Absolutely. Those frustrating scenarios where the price quickly reverses, stops you out, and then maybe continues in the original direction anyway. Very annoying, very costly. By filtering out these lower probability setups, the EA effectively tries to lock in stronger directional moves, which should directly contribute to its consistent profitability.
So ATR says, is it safe to cross the road? And ADX says, is the road actually going somewhere worthwhile?
I like that analogy too. Yes, something like that. A speedometer and a compass for market navigation. This strategic pairing is really a cornerstone of its disciplined and hopefully effective entry logic.
That's a really insightful way to put it. Paints a very clear picture, precision and confirmation. But okay, let's say the EA uses these filters, gets into a good trade, and it moves into profit. How does it make sure those hard-won gains are actually realized? How does it avoid giving them back to the market if there's a sudden reversal? Because that's often a huge challenge for us humans, right? Letting winners run versus locking in profit.
You've absolutely hit on a critical point. This is often what separates the consistently profitable strategies, whether manual or automated, from the less effective ones. And this is where FAIDA Ventures says their proprietary High-Watermark Take-Profit or HighWatermarkTP feature comes into play.
High-Watermark Take-Profit. Okay, proprietary. How does that work?
Well, this innovative function is designed to automatically lock in account equity growth at a predefined threshold. So imagine you've set a specific profit target for your overall account equity.
Not just for one trade, but the whole account.
Exactly. Once the collective profit from all open trades pushes your total account equity past that preset high-watermark TP level, the EA acts decisively.
What does it do? Close everything.
That seems to be the implication. Its primary purpose is ensuring that gains are realized and secured before any potential market reversals can eat away at those profits.
Okay, so it protects the peak equity level in a sense.
Precisely. It addresses that major psychological hurdle for human traders, greed, right? Holding on to profits, hoping for just a little bit more, only to see them vanish. Or the opposite, fear, cutting profits too early.
Yeah, we've all been there.
By automating this profit-taking based on predefined, data-driven thresholds for the entire account, the EA removes emotion from that specific decision entirely. It proactively secures profits, ensuring that moments of significant account growth are captured and preserved. This intelligent, automated profit-taking mechanism is positioned as a cornerstone of the EA's consistent profitability and capital preservation strategy.
So it's not just letting profits run indefinitely and hoping for the best. It has a smart, automated way to bank those gains at optimal points for the account as a whole. That sounds quite sophisticated.
It does suggest a focus on overall account health, not just individual trade outcomes.
But what about the other side of the coin? Managing risk. What happens when things don't go as planned, or even in anticipation of potentially bad moves? How robust is the EA's approach to protecting capital? That's just as important, if not more so.
Absolutely crucial. For robust risk mitigation, the FAIDA Capital Trader apparently incorporates a highly sophisticated hedging logic through its use HedgeEA function.
Hedging logic. Okay, use HedgeEA. What does that entail?
When this feature is enabled, the EA gains the ability to open simultaneous buy stop and sell stop orders.
Okay, hold on. Buy stops and sell stops at the same time. How does that work?
Let's unpack that. Instead of just placing a single entry order based on its core signal, it prepares for price movement in both directions simultaneously using pending orders. For instance, if the main strategy suggests a buy is likely.
It places the buy order or maybe a buy stop.
Right. But simultaneously, it might also place a sell stop order below a key level, essentially acting as a dynamic protective counterposition.
So it's like setting a trap in both directions or preparing for a breakout either way.
It's more about protection, I think. The description says it dynamically hedges positions for optimized drawdown control.
Drawdown control. Okay, define drawdown for us again simply.
Sure. Drawdown is just the temporary decline in the value of your trading account from its previous peak value. It's a key measure of risk, how much your account value dipped during losing periods.
Right. Lower drawdown is generally better, smoother equity curve.
Exactly. And hedging, in this context, means opening an offsetting position like a sell order if you already have an open buy to protect against potential losses on that existing trade if the market moves against you.
So if the market unexpectedly tanks while you're long,
The hedge position, the sell stop in this case, might activate, becoming an open sell trade. This effectively cushions the financial impact of the losing buy trade and significantly mitigates the risk. The goal is to keep the overall account drawdown low.
which is crucial for capital preservation and, frankly, maintaining your sanity and confidence in the system.
Absolutely. It's always a delicate balance, isn't it, between trading aggressively enough to capture profits and implementing robust risk management. This dynamic hedging logic sounds like a prime example of how the EA tries to manage that balance.
Pursuing profits while building in powerful safeguards.
Yeah, it acknowledges that markets are inherently unpredictable, and it tries to proactively prepare for various scenarios. That potentially sets it apart from simpler EAs that might just rely solely on fixed stop losses, which can get hit by noise or sudden spikes.
That's a truly comprehensive approach, covering both profit-taking for the account and this dynamic hedging for risk. It's clearly far more than just a simple entry-exit signal generator. It sounds incredibly robust, multi-layered.
It certainly seems designed that way.
So what other advanced layers of control and logic are built into this EA? Things that go beyond just the basic entry signals, the H/X filters, and the hedging.
You're right, there's more. The FAIDA Capital Trader v13.75 is apparently engineered with several other sophisticated management features that contribute to its resilience and performance optimization.
Like what?
Well, one key advanced feature is something called session gating.
Session gating. Okay. Sounds like controlling when it trades.
Exactly. This allows the EA to trade only during your chosen days and hours. The source gives an example like being active Sundays at 20.07, 23.57 Nairobi time.
So really specific time windows. Why is that important? Why not just let it run 245 during the Forex week?
Well, it's incredibly important because financial markets exhibit dramatically different characteristics depending on the time of day and the major global trading session that's active. You know, the relatively quiet Asian session, the bustling London European session, or the high volume New York North American session.
Liquidity and volatility change a lot.
Massively. And avoiding illiquid sessions when trading volume is extremely low is often crucial.
Why? What are the dangers of low liquidity?
During those times, prices can become erratic, jumpy. Spreads the difference between the buying and selling prices tend to widen significantly, making trades more expensive to enter and exit.
Right, costs go up.
And even relatively small trades can cause disproportionate price movements, leading to increased slippage where your order gets filled at a worse price than you expected. Basically, trading during illiquid times can be extremely difficult and much riskier.
So session gating is a strategic choice to operate only when conditions are most favorable.
Exactly. Favorable, liquid, and perhaps more predictable. It significantly reduces exposure to unnecessary risk associated with those thin market periods. It's about optimizing for the best trading windows, not just trading constantly for the sake of it.
Okay, so it's not just what to trade, but precisely when to trade, optimizing for specific market conditions. Smart. What other safeguards are built in, maybe for those sudden extreme market events, black swan events, flash crashes?
Good question. They also incorporate maximum SLTP caps. These are preset hard maximum stop loss SL and take profit TP levels applied to each individual trade.
So different from the high watermark TP for the account. These are per trade.
Yes, these seem to be per trade. And importantly, they aren't dynamic adjustments based on real-time conditions like ATR might influence. They serve as absolute limits, like a ceiling and a floor.
Okay, what's their main function then?
Their function is explicitly stated as safeguard against anomalous spikes or sudden extreme market movements that might potentially overwhelm other dynamic risk tools.
Like the hedging or volatility filters.
Right. Imagine a flash crash or some unexpected high-impact news announcement like a central bank surprise that causes a currency pair to just plummet or skyrocket hundreds of pips in seconds.
Yeah, chaos.
These caps act as a final, unyielding line of defense, like a circuit breaker for that specific trade. They ensure that even in the most extreme, unforeseen circumstances, your capital exposure on that single trade is limited. It's like an emergency brake designed for the worst-case, unexpected scenarios.
Okay, so that provides a critical layer of hard protection, a safety net beneath the more dynamic controls. And just revisiting that profit-taking mechanism we talked about, the high-watermark TP, is there an overarching goal there for securing profits at the account level beyond just the individual trade TP caps?
Absolutely. And this ties back directly to the high watermark TP, but it's framed within a broader concept they seem to term dynamic exit on equity milestones.
Dynamic exit on equity milestones. Okay.
This means, as we touched on, when your entire account equity, the total value of your account, not just the profit on one open trade, surpasses that predefined high watermark TP threshold.
All open trades close immediately.
That's the idea. All trades close immediately.
Yeah.
This isn't just about banking individual trade gains. It's positioned as a proactive, strategic move to secure portfolio-level profits. Lock in the overall growth.
So it's about preserving the overall progress of the account capital.
Exactly. By taking the entire account exposure off the table once a significant predefined equity milestone is hit, this mechanism effectively preserves your gains by proactively securing that accumulated growth from any subsequent potentially unpredictable market reversals, allowing you to theoretically lock in a substantial portion of your accumulated wealth periodically.
That's very intelligent. It really speaks to a long-term capital preservation mindset, not just chasing every last pip. Okay, but let's get into the really deep technical weeds now.
Yeah.
The source mentions cutting-edge derivative logic. Logic 2.
Oh, yes, the logic 2.
Can you break that down for us? What makes this so advanced, and how does it contribute to the EA's precision, supposedly?
Right. This is where the FAIDA Capital Trader really seems to showcase its advanced analytical sophistication. Logic 2 apparently introduces a concept called DI derivative entry,
DI derivative entry.
which uses successive ADX plus and ADX flips to pinpoint micro reversals.
Oh, okay. Slow down. ADX plus and ADX flips. Micro reversals. Simplify that for us.
Okay, let me try. We already talked about the ADX indicator measuring trend strength.
Right. The compass telling us how strong the trend is.
Well, within the ADX indicator itself, there are actually two underlying components. The plus DI line, which stands for positive directional indicator, and the ADI line, the negative directional indicator.
Okay, plus DI and ADDI, what do they show?
In simple terms, the plus DI line indicates the strength of upward price movement, and the ADI line indicates the strength of downward price movement. How they relate to each other helps show direction and strength.
Got it. Up strength versus down strength.
Now, a DI derivative entry apparently means that EA isn't just looking at whether the plus DI line is above the IDI line or above some level. That's basic ADX interpretation. Instead, it's looking at the rate of change, the derivative, and the sequence of how these plus DI and DI lines are interacting.
The rate of change, like how fast they're moving.
And specifically, how they are crossing or flipping over each other in rapid succession. Think of it like this. Instead of just watching if a traffic light is red or green, that's like basic plus DI position.
Okay.
This EA is watching how fast that light changes from red to green, or maybe if it quickly flickers back and forth a couple of times. It's looking for that subtle, very quick shift, that flicker, which might signal a tiny, almost immediate reversal in momentum that other slower systems or indicators might completely miss.
So it's trying to catch the very, very beginning of a tiny pullback or bounce.
That seems to be the idea. Pinpointing these micro reversals, this could potentially allow the EA to enter trades right at the cusp of these short-term shifts, maximizing potential profit from even very minor market fluctuations. It sounds like extreme short-term precision timing.
That sounds incredibly precise, almost like trying to predict the next tiny wiggle.
Okay, so how does Logic 2 then operationalize this? What are its key operational points that ensure this advanced entry logic is executed efficiently and hopefully safely? Good question. Precision needs discipline. Logic 2 reportedly operates with 3 critical points to ensure maximum efficiency and disciplined execution.
Okay, number one.
First, it constantly counts existing buy-buy stop and sell-sell stop positions. This is crucial internal accounting. It ensures the EA always knows exactly how much exposure it currently has in the market.
Like a risk manager keeping track of all open bets.
Exactly. It's like a pilot always knowing the aircraft's current configuration and fuel state. This awareness is designed to prevent the EA from accidentally over-leveraging the account by placing redundant or excessive trades.
Makes sense. Prevents piling on too much risk. What's number two?
Second, and this sounds like a profound point for risk management and capital discipline, it rearms new pending orders only when no current exposure exists.
Only when no current exposure exists. So if it's already in a trade or has a pending order, it won't place another one.
That seems to be the rule for Logic 2. It will only place new pending buy or sell orders if it doesn't already have an active trade or pending order of the same type open.
Why is that so important?
It rigorously prevents the stacking of too many trades in one direction, which is a common way automated systems and humans can blow up an account if the market moves hard against that stacked position.
Right, adding to losers or getting overconfident.
Precisely. This seems designed to maintain disciplined capital allocation, ensuring the EA isn't just churning out orders constantly, but is strategically waiting for clear, high-probability setups based on this micro-reversal logic without overcommitting capital.
Okay, very disciplined. And the third point.
And third, it apparently has the option to close on DI flip if momentum reverses. This is the protective aspect, the exit strategy linked to this precision entry.
So if the micro-reversal it just entered on starts to fail immediately.
Exactly. If the very signal that prompted the entry then shows signs of reversing again, meaning the tiny momentum shift it was trying to capture is already fading or turning against it, the EA can exit the trade immediately.
Cutting losses extremely quickly on these short-term plays.
That seems to be the goal. Minimizing potential losses on these very short-term trades, or perhaps securing tiny gains before they evaporate. It's an exit logic tightly coupled with the sensitive entry logic.
Wow. Okay, so the overall impact of this precision entry logic, this logic 2,
is intended to minimize redundant orders and maximize risk-adjusted returns. It really sounds like a hallmark of truly advanced algorithmic trading, where every entry is calculated for optimal probability and every exit is geared towards protecting capital or securing profit with extreme efficiency.
And if we connect this to the bigger picture.
Yeah, if we connect this to the bigger picture of automated trading, Logic 2 seems to exemplify how they're trying to refine entries down to the micro level, optimizing for these high-probability, fleeting setups while simultaneously building in robust capital protection rules. It shows a relentless pursuit of efficiency and superior risk management, even at that very granular level.
Wow, that's an impressive array of intelligent design, really. From identifying subtle trends and these micro-reversals, all the way to meticulously protecting gains and capital with multiple layers. Okay, so for you listening, especially if you value control and adaptability, a critical question has to be, how customizable is the FAIDA Capital Trader v13.75?
Right. Is it a black box or a toolkit?
Exactly. Can it truly be tweaked to fit different trading styles, different risk appetites, different market views?
Absolutely. And this seems to be one of the significant advantages highlighted for the FAIDA Capital Trader v13.75, something that really empowers its users. It's positioned as not being a rigid one-size-fits-all system where you just, turn it on and cross your fingers.
Hope for the best, yeah.
Instead, FAIDA Ventures seems to have ensured that virtually every single input within the EA is fully user configurable.
Every single input. That's a lot of levers to pull.
It implies granular, detailed control over its behavior. This allows it, theoretically, to adapt to a really wide spectrum of trading strategies and risk tolerances.
That's a powerful statement. Every single input. Can you give us some specific examples? What kind of inputs can a user actually tweak to mold the EA to their specific needs or preferences?
Certainly. The source highlights a few key examples that really illustrate this level of control.
Okay.
First, magic number 975310. Okay, sounds a bit weird, but this is actually a standard MetaTrader 4 input.
What does it do?
It's basically a unique ID tag. It allows the EA to identify its own trades separately from any other trades happening on the same account. This is crucial if you're maybe running multiple different EAs or if you're also trading manually on the same MT4 account.
Ah, so it doesn't get confused or mess with other trades.
Exactly. It ensures the EA only manages its own positions and doesn't interfere with anything else you're doing. Keeps things organized.
Okay, makes sense. What else?
Entry offset. This parameter likely controls how far away from a specific trigger price point an entry order, like a stop or limit order, is actually placed. Think of it as adding a little buffer zone.
Why would you want a buffer?
Well, a smaller offset might make entries more aggressive, trying to get in precisely at a reversal point. But a larger offset could make them more conservative, maybe waiting for a bit more confirmation, a clearer move away from the level before entering. It adds a layer of sensitivity or caution to the entries.
Okay, so you can fine-tune how close to the fire it gets.
Something like that. Then there's risk-reward. This is fundamental. It directly aligns the EA's trading behavior with your personal risk tolerance. You can define the desired ratio of potential profit and take profit to potential loss, stop loss, for each trade it takes.
Like aiming for 2.1 or 3.1 reward to risk.
Precisely. You could set it to aim for twice the profit for every unit of risk, or 3 times, or whatever ratio fits your strategy. This ensures the EA's trading behavior consistently reflects your investment approach and your comfort level with risk.
Very important for aligning it with your own psychology.
Absolutely. And one more example given is total range. This input might tell the EA to only consider placing trades when the market has moved within a specific price range over a certain period.
Why filter by range?
It could help it avoid really stagnant dead market conditions where there's just no movement, no volatility, making profits hard to come by. Or, conversely, it might help avoid overly erratic, unpredictable conditions where volatility is just too extreme and chaotic. It essentially filters for what it considers optimal market activity levels for its strategy.
So filtering out chop and also filtering out maybe insane volatility.
Potentially, yes. And these are just a few examples. These inputs, along with presumably many others, give the user really profound control, allowing them to fine-tune the EA's sensitivity, its aggression level, its risk parameters, and its overall strategic posture.
So it's not just about tweaking numbers, but making fundamental strategic choices that could dramatically alter how the EA actually approaches the market.
That seems to be the case.
What about more macro adjustments, like how frequently it trades or what kind of market conditions it looks at more broadly? Can you adjust that?
Yes, absolutely. Beyond those specific numerical inputs, the user apparently has some very powerful customization options that fundamentally impact the EA's overall trading style.
Such as?
Swapping timeframes. You can choose to run the EA on different chart timeframes. The source mentions examples like M5, the 5-minute chart, M30, a 30-minute, H1, 1 hour, etc.
And that makes a big difference, right? Trading on a 5-minute chart versus an hourly chart.
Huge difference. It allows for vastly different trading frequencies. An M5 setting will typically result in much more frequent, shorter-term trades, scalping or day trading, trying to capture small price movements multiple times a day.
More active?
Very active. Conversely, running it on an H1 or H4 chart will look for longer-term opportunities, leading to fewer trades overall, but each trade potentially aiming for larger price moves, holding for hours or even days. Swing trading, essentially.
So you can directly align the EA's speed and trade frequency with your preferred trading rhythm, or maybe your availability to monitor it.
Exactly. It caters to different styles. Another key area is adjusting key indicator periods.
Like the periods for ATR and ADX we talked about.
Yeah, precisely. Modifying values like ATR period, ADX period, and the gating thresholds for these indicators. Changing these numbers allows you to make the underlying indicators that drive the EA's logic more or less sensitive to price changes or trend strength.
How so?
For example, using a longer ATR period would make the EA react to changes in volatility more slowly, smoothing it out. A shorter ADX period would make it more sensitive, reacting quicker to subtle, rapid shifts in trend strength. This really lets you fine-tune the EA's eyes and ears in the market, dictating how quickly and how strongly it responds to market signals.
Tailoring its responsiveness.
Okay. And finally, enabling or disabling specific filters. The source mentions options like turning on or off buffered SL, stop loss, weekend trading, or trader radius filters.
Being able to switch entire modules on or off, that offers incredible flexibility.
It really does. For instance, disabling weekend trading means the EA simply won't open or close trades during those less liquid, often gappy weekend market hours, a significant risk management choice for many traders.
Avoid those Sunday night gaps.
Exactly. A buffered SL might add a small, configurable buffer to the calculated stop-loss level. The idea is to avoid being stopped out prematurely by minor temporary price fluctuations or just market noise around key support resistance levels.
Give a little breathing room.
Right. And conversely, something like a trader radius filter could perhaps prevent trades from being placed too close to certain critical price points like major round numbers or previous highs lows that might be susceptible to stop hunts or extreme volatility, further reducing risk from known market manipulation patterns or just noise.
That's an astonishing amount of control, really. It genuinely seems like it's designed not just as a product, but as a flexible tool, something that can grow with a trader's experience or adapt to various market phases.
That's the impression it gives, yes. A toolkit rather than a fixed solution.
So what does this all mean for you, the individual user, looking to maybe optimize your automated trading experience with FAIDA Ventures?
Well, it means that this apparent versatility lets institutional traders and retail investors alike tailor the EA to their risk profile and market view. That's a key takeaway.
So it's not just for one type of trader.
Doesn't seem so. If you're a more conservative investor, you can seemingly configure the EA to use tighter risk-reward ratios, implement more stringent stop-loss rules, maybe operate on higher timeframes for fewer longer-term trades.
Okay.
Conversely, if you're a more aggressive trader and you fully understand the associated risks, you might opt for lower timeframes, maybe loosen the filters a bit for a more active trading style.
Tailoring it to your own comfort zone and goals.
Exactly. This profound level of configurability seems to transform the EA from potentially being a rigid set-and-forget system into a dynamic, adaptable instrument, one that can be precisely calibrated to match individual preferences, strategic nuances, and even evolving market views over time.
It genuinely sounds like it empowers the user, offering potentially a thorough understanding and unparalleled control over their automated trading, making it a potentially powerful, custom-fit asset in your financial toolkit.
That seems to be the aim, based on the description of its customizability.
Okay, this deep dive has truly revealed the intricate inner workings and the, well, extensive customizability of the FAIDA Capital Trader v13.75. We've seen the meticulous design, the layers of strategic intelligence. Now, the crucial question, the bottom line for any potential user, what are the real-world results?
Right. Does it actually work?
Exactly. And how has this EA evolved over time to reach this version, v13.75? We need to talk about its proven track record and adaptability.
Yeah, this is where the rubber meets the road, isn't it? Where the theory meets the practical, and hopefully the numbers speak for themselves. The source material strongly emphasizes that the FAIDA Capital Trader isn't just some recent flash in the pan. It has a significant, proven history of continuous refinement and apparently robust performance. It explicitly states that version 13 has been tweaked and updated over many years. This is a really critical insight, I think.
Why is the version number and the tweaking so important?
Because it tells us this is not a static product launched and forgotten. It's presented as a living, evolving system. Since its original inception way back as version 1.0, reportedly in 2014.
That's over a decade of evolution.
Exactly. The EA has apparently been consistently improved, undergoing countless adaptations to market changes, incorporating lessons learned from all that extensive live trading data we discussed, and integrating new technologies or refined logic along the way. This ongoing iterative evolution is absolutely key to sustained success in dynamic Forex markets. You can't just set and forget an algorithm forever.
Markets change, algorithms need to adapt.
Precisely. It's positioned as a testament to their commitment to staying ahead of the curve, constantly refining.
That continuous refinement and sheer longevity in such a competitive space.
Yeah, that is genuinely impressive, if true. So, what kind of concrete, quantifiable results has this long-term development and live testing actually led to for users? Can we talk specific performance metrics? What does the source claim?
Absolutely. The source provides some compelling data points that are meant to underscore its effectiveness.
Okay, let's hear them.
First, average monthly return. It states an average monthly return 3 to 6%.
Yeah.
But importantly, it adds the caveat, depending on settings and liquidity.
3 to 6% per month. On average, that's quite significant if consistent.
It is. While 3-6% might not sound like a get-rich-quick overnight kind of promise, and you should be wary of those anyway, the power of compounding those kinds of returns month after month can lead to truly substantial wealth accumulation over time.
Yeah, compounding is powerful. Consistently achieving those sorts of returns in an automated, potentially hands-off manner would be a strong indicator of a robust strategy. And that caveat, depending on settings and liquidity, directly ties back to the customizability we just discussed.
Right, your choices impact your results. Aggressive settings might aim higher but have more risk. Conservative settings lower returns but maybe less risk. And liquidity matters.
Exactly. A user can, to some extent, influence their potential returns by adjusting risk and frequency settings. And naturally, the market's prevailing liquidity conditions at the time of trading will also play a role. You can't force profits from a dead market.
Okay, so 3-6% average monthly return. What about risk? What about the downside?
Crucially, the EA reportedly boasts a maximum drawdown, 8% on average, and it explicitly adds thanks to dynamic hedging.
Less than 8% average maximum drawdown. Remind us again why low drawdown is so important.
Well, drawdown, that pick-to-trough decline in your capital. Keeping it low, consistently below 8% on average, is an excellent indicator of robust risk management, especially in the volatile Forex market.
It means you're not suffering huge, scary dips in your account value.
Exactly. It signifies that the EA avoids large, detrimental swings in account equity, providing a much smoother, potentially less stressful equity curve. And the fact that this low drawdown is explicitly attributed to its dynamic hedging feature reinforces how those sophisticated risk management layers we detailed earlier are designed to actively protect client capital, preventing significant account setbacks.
So profitability combined with strong risk control. That's the goal.
That's the holy grail of trading, yes. And one more point on results, outperformance. The EA has supposedly demonstrated consistent outperformance of buy and hold strategies on major currency pairs.
Okay, outperforming buy and hold in Forex. Why is that significant? You can't really buy and hold currencies like stocks, can you?
Not really, no. In the Forex market, which is incredibly liquid but often very volatile and crucially lacks underlying asset ownership like stocks, a simple buy and hold strategy is generally not feasible or profitable over the long run. You have factors like overnight rollover costs or swaps, margin requirements, and just the inherent nature of currencies fluctuating rather than trending upwards indefinitely like some stock markets might.
So outperforming buy and hold means?
It means the EA is actively and effectively navigating the unique challenges of the currency market. It's generating active returns by trading the fluctuations rather than just passively holding something. It suggests it's successfully extracting profit from market movements, which is the entire point of active trading.
Okay, so it's not just profitable in isolation, but it's apparently generating returns in a way that's suited to the specific nature of the Forex market and managing risk exceptionally well while doing so. Which, as many experienced traders know, controlling risk is often the harder part of achieving consistent profitability.
It absolutely is. Offense sells tickets, defense wins championships, as they say. Risk management is the defense.
Right. And in terms of staying ahead of the curve, continuing that evolution, what's next for FAIDA Ventures and this EA? Are they just resting on their laurels with v13.75, or are they pushing the boundaries even further?
Doesn't sound like they're resting at all. Their commitment to innovation seems continuous and very forward-looking. The source makes it quite clear. We're already testing machine learning-driven parameter optimization for v14.00.
Version 14.00 with machine learning. Okay, that sounds like a significant leap.
It really does. Machine learning, ML-driven parameter optimization, that represents a potentially huge step forward in algorithmic sophistication.
How would that work? In simple terms.
Instead of relying solely on developers manually tweaking settings based on past data or using simpler optimization algorithms, they'd be leveraging the power of artificial intelligence, specifically machine learning. ML algorithms can analyze vast amounts of historical market data, identify incredibly complex, subtle, potentially nonlinear patterns in relationships.
Things humans might miss.
Exactly. And based on that deep analysis, the ML could potentially find the optimal settings and parameters for the EA under various market conditions, far more dynamically and perhaps more effectively than traditional methods.
So it could lead to even better performance, more adaptability.
That would be the goal. Potentially uncovering trading opportunities or risk management nuances that human analysis or simpler optimization might overlook. It's about using AI to constantly refine the EA's brain, essentially.
And this ties into their goal of staying ahead.
Absolutely. This focus on keeping our edge ahead of shifting market regimes is paramount in today's financial world. Market regimes, as you know, are these distinct phases. The market goes through periods of high volatility, low volatility, strong trending, sideways, range-bound movement, risk on, risk off, etc.
And what works in one regime might totally fail in another.
Precisely. A trend-following system struggles in choppy markets. A range trading system gets killed in strong trends. By constantly innovating and looking to integrate cutting-edge technologies like machine learning, they aim to ensure the EA remains highly effective, resilient, and consistently profitable, regardless of how market conditions evolve or what new regime the market decides to enter next.
That adaptability is key for long-term survival.
It really is. And what's truly fascinating here, I think, is how they're positioning this blend. The proven historical results of their long-refined v13.75, combined with this active, aggressive pursuit of future technological advancements like ML for v14.0, it shows a relentless, proactive approach to maintaining and enhancing their competitive edge in the fast-paced world of automated finance.
That blend of a proven, long-term track record with a clear, innovative vision for the future, leveraging new tech like machine learning.
Oh.
Yeah, that really is a testament to FAIDA Ventures' apparent dedication. Okay, this deep dive has given us a truly comprehensive look We've covered their heritage, the nuts and bolts of the FAIDA Capital Trader v13.75 EA, its profitability claims, the risk management, its evolution, its deep customizability.
Wow, we've covered a lot of ground.
We have. So for you listening, if you're serious about exploring automated trading, or maybe you're looking for ways to potentially grow your wealth without, as they say, lifting a finger, what are the clear, actionable next steps you can take? How can you learn more or possibly engage with FAIDA Ventures?
Okay, for those intrigued by everything we've discussed and maybe keen on staying informed or exploring further, FAIDA Ventures provides some very clear pathways to engage.
What's the first step, especially for learning more?
Firstly, for regular educational updates and what sound like invaluable insights into how the EA operates, and perhaps the broader world of algorithmic trading, they strongly recommend you subscribe to their YouTube channel.
Their YouTube channel, what kind of content is there?
The source highlights that their channel provides weekly EA walkthroughs and live performance updates. This suggests it isn't just a static promotional platform, it sounds more like a living educational hub.
So you can see the EA in action, maybe learn more about the markets.
Exactly. See the FAIDA Capital Trader v13.75 potentially in action, learn about market dynamics through their analysis, and gain a deeper understanding of automated strategies in general. This aligns perfectly, I think, with you, our listener, often looking for that consistent stream of thorough, practical knowledge.
Okay, so YouTube for ongoing education and updates, that's clear. And how can our listeners help spread this knowledge if they find it valuable?
Well, the classic call to action. To help fellow traders unlock next-level automation and maybe foster a growing community around powerful tools like this, you can easily like and share their videos or even this deep dive itself.
Right, standard social engagement helps visibility.
Exactly. By doing so, you help others discover the potential of sophisticated automated trading solutions and contribute to a more informed trading community overall.
Makes sense. Now, for those who might be considering taking the next step, maybe exploring the possibility of engaging directly with their services, perhaps leveraging those managed accounts we discussed earlier, what's the most direct path for that?
Okay, if you're serious about the prospect of potentially having experts manage your trading using the FAIDA Capital Trader v13.75, the most direct next step mentioned is to visit www.faida.co.ke.
faida.to.ke, that's their main website.
Seems to be. That's presented as the primary portal to their managed account services, where, as we've emphasized, the pitch is you can let our experts trade on your behalf with FAIDA Capital Trader v13.75.
Tying back to leveraging their expertise and the EA's track record for that hands-off approach.
Exactly. It connects directly back to that initial premise, aiming to make it an efficient and appealing option, especially for the busy individual who doesn't want to manage the EA themselves.
Okay, that provides a very clear roadmap for engagement, YouTube for learning, website for potential service engagement. However, in the world of finance, especially with trading and investment products, it's absolutely crucial we include a very important consideration for you listeners.
Absolutely critical. We cannot stress this enough. We must underscore this disclaimer for everyone listening. This content is for educational purposes only. FAIDA Ventures Ltd. is not a regulated financial entity. Please consult with a licensed advisor before making investment decisions.
Okay, let's break that down. Educational purposes only, not financial advice.
Correct. While we've presented factual information as derived from the source material provided to us, any financial decision you make, particularly one involving automated trading systems, managed accounts, or forex trading in general, should always be made after careful personal consideration and research.
And FAIDA Ventures Ltd. is not regulated. What does that mean?
It means they are not overseen by a major financial regulatory body like the FCA in the UK, ASIC in Australia, or the CFTC-NFA in the US. This implies different levels of investor protection and recourse compared to dealing with regulated entities. It's a very important factor in your due diligence.
So conduct your own due diligence and, crucially,
most importantly, consult with a qualified, licensed financial advisor, someone who can properly assess your individual financial situation, your specific tolerance for risk, your investment objectives, and your long-term goals.
because we can't provide that personal advice.
Absolutely not. A licensed advisor can provide tailored advice that we, as hosts of this deep dive, simply cannot and should not give. This emphasizes your responsibility, everyone's responsibility, to seek professional, personalized guidance before making any investment commitments, especially in complex areas like automated forex trading. Do your homework.
That's a vital point to remember for everyone. Okay, this deep dive, It really has taken us on quite a comprehensive journey, hasn't it?
It certainly has, from origins to cutting-edge logic.
We began by understanding FAIDA Ventures' decade-long heritage, their Nairobi origins, that stated commitment to transparency and client-centric service. Then we dove deep into the intricate mechanics of the FAIDA Capital Trader v13.75 EA.
Unpacking the price action core, the dual filters, the high-watermark TP, the dynamic hedging.
Exactly, all driving its claimed consistent profitability and robust risk management. We explored its advanced layers, session gating, risk caps, even that cutting-edge logic too for hyper-precise entries and exits.
And the immense customizability, too. How it can seemingly adapt to different traders.
Right, allowing it to potentially fit diverse trading styles and preferences. And, crucially, we examined its real-world validation, the claimed results, that consistent average monthly return, the exceptionally low drawdown figures, and their ongoing commitment to innovation with machine learning for V14.
A blend of history and future focus.
And finally, we outlined those clear next steps for you. Connecting with FAIDA Ventures, whether for continuous educational updates via their YouTube channel or exploring their managed account services through their website, always keeping that crucial disclaimer in mind.
A full picture, hopefully.
So what does this all mean for you? Here's something to think about. Consider how this narrative of continuous innovation, exemplified by the FAIDA Capital Trader's evolution all the way to version 13.75 and looking ahead to V14 with machine learning. Consider how fundamental that constant adaptation is in navigating the incredibly dynamic, ever-changing world of automated finance. How does understanding this relentless pursuit of refinement and adaptability empower you in your own financial journey? Whether you choose to engage directly with solutions like this or simply use this knowledge to deepen your understanding of the forces shaping modern finance.
A powerful thought to end on. Adaptability is key.
Thank you for joining us on this deep dive. We hope you found this exploration into FAIDA Ventures and their EA as insightful and thought-provoking as we did.
Yeah, fascinating stuff.
We look forward to exploring more fascinating topics with you very soon.